Good morning, everyone, and welcome to Nadex Morning Analysis, where we discuss hot spots in the market today, where you could look for some potential short-term trading opportunities before. Um, by the way, my name is Todd Rich. I'm with Nadex. With me is Brian Caprice from Keep Trading Simple. Before we jump into some hot spots to look at today, I need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And then this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. All right, so with that, I think we're going to start off. There's some economic news coming out of the UK. So let's take a look at what's going on in the pound sterling.
Yeah. So on Tuesday morning, at this point, I'm sure everybody pretty much knows. We do a 9 to 9:15 every morning, and then on Tuesday we do a more detailed breakdown of kind of the best opportunities for the week. One of them that we highlighted on Thursday again, it's always great when we get UK or European news at a reasonable hour, but it's great when we get one at 7 a.m. because we don't have to wake up in the middle of the night to be able to trade them. But here is a monetary policy statement from the UK. And if you look at the situation that the UK was in, right, we had Brexit 1 month ago. We had lockdowns that initiated a few weeks ago, so you expect to see, a better condition there. The pound is pretty much was at rock bottom. They're not going to drop their official bank rate below 0.1. Basically, all there was an upside. There wasn't really much that they could say that was negative. Because again, Brexit, just everything. We're at rock bottom. When you see something like this, where for the most part you really feel and you go into it knowing that this is probably going to be a pound strength type of move, immediately you jump across and kind of see where we are levels wise. Well, here is the move, and again, this chart right now is of the pound dollar on the 30-minute chart. Make my little yellow cursor so you guys can see it. Right when price drove right down into a level. It's a level that was in earlier this week at 135.68. It just happened to kind of grind its way down right until, right at 7 o'clock. That's where we hit the zone. Now, as you can see, the response off of this was absolutely just a firecracker, straight up in the air. And again, we expected pound strength with this type of news. This brown box right here, this just happens to be the knockout. Now, again, this is one of those things that if you stay with this, when you can find a knockout with limited risk, and again, you can see it goes just past where the zone is there. This has already gone up a 1 to 10 and ran into the opposing zone at 137. That, again, the other level that we mentioned on the top side that we were looking for kind of the bookends on both sides. But again, whenever you can find anything that is a 1 to 10 risk to reward ratio, these are one of those ones that you got to be able to grab.
Let me flip that over there because you could explain it here on the platform itself. So yeah.
I mean, you can see it right there. I mean, it was because it was close to the floor, very, very low risk. It's a level that we've talked about probably 2-3 weeks now. And again, what happened? It was timing. You know that at 7 o'clock the news was coming out. You get in there 10-15 minutes early. You can say, hey, listen, we're approaching a level right now. There's a floor in this knockout that gives us the limited risk that we're looking for anyway. It has the potential to go at least over 1 to 3. In this case, it was going over 1 to 5. And the opposing zone, the one that we mentioned on Tuesday, was up at a 1 to 10. And that's actually what we just bounced off of, was the 1 to 10. So again, it's one of those situations where in less than 2 hours, you were able to move on this one approximately 132 pips to the top side. And your total risk on this one, was only about 13 pips. So figure maybe $20, $22 worth of risk most likely on that one with the premium jacked in. And it moved about 130 pips in the opposite direction.
So yeah, we could actually even show this the other way. Here, I want to flip it back because you saw it with the euro pound as well. Yes.
Yeah. So yeah, I mean, here's the euro pound. This is another one that we mentioned. This one, in this case, it was the ceiling. And again, 30-minute chart. You can see here. In this case, the indicator was actually picking up the 30-minute on the lower time frame as well, saying, hey, listen, this is not only a failure to go higher, it's a zone that qualifies as a good area of sellers. Same thing. 7 o'clock in the morning, right before we came right up to that area, waiting for the news release. This one also had a drop of about 80 pips in less than 2 hours. And this one, the ceiling would have been the 88. It's actually here. 88.48 is where that one is. Yep, you can show it.
I'll flip it over here. We can look at it right on the platform. And the nice thing about these knockouts, whenever you're looking at them, again, you can visualize them very easily and quickly. Where are your levels? Where's your where's your potential risk and reward? Where are the boundaries? If you want to take a direction, you can rotate between your different knockouts by simply clicking on the left-hand
Yeah.
side and then trade right from the chart. What do you want to do? Do you
Yeah.
want to buy or do you want to
And
sell?
then you could even see it on there. I mean, you can see where that knockout comes up to. You can definitely see it's an area where sellers have been in the past.
Yep.
Like, this is one of those things listen, we're not using magical percentages. We're not using some mystical 12, different types of indicators. We're looking on the chart, reading price action, keeping it simple and saying, listen, sellers have been here in the past. There's obviously going to be some level of calculated risk that you have to take. That's just trading. There's risk all trading. But if you're able to minimize that risk and manage it correctly and make sure you have the room to run, that's ideally what you want to do when you trade. And again, people are like, I don't have 12, 15 hours to spend in front of a computer. Listen, we've known for weeks that 7 o'clock this morning was going to be a big release from the UK. When it lines up, I mean, how much analysis did this really need? You really need to do on this one? Not a lot. Again, you got to be able to use news, use Forex Factory, Daily. Again, you can set alerts. It'll trigger to your phone. So there's a lot of ways to get back and take advantage of these things. And people need to do this more often.
Yep. All right. So that was that was some news coming out of the UK. We've the pound finally seeing the strength that people have been looking for. Now let's take a look at some hot spots where things that are moving. Gold is finally moving, and it finally broke through a range that we've been talking about for a while.
Yeah, and same thing. We mentioned it. Zones work, but they last forever. And the more hits you hit of a zone, you eat the buyers or sellers out of those areas, and eventually they're going to fail. And in this case, you can see just on this 1 hour, here's 1, here's 2, here's 3. Number 4 is what the breaker was. Larger time frame, you can see the same thing. Interestingly enough, again, these are the rules that we talk about with Harry Potter. Eventually, when the zone breaks, what do? We look to continue that with one of those Harry Potter trades. And again, I'll draw it right next to it so you guys can see it. But there was the down push. There was the pull back to the zone. And then there was the collapse yet again. Now, I mentioned yesterday, at least for my guys, that 1800 is a big psychological level. It breaks 1800, which it just looks like it did on my chart. That's where the news is like, oh my God, are the bears stepping in? It broke 1800. We're going south again. So again, it is definitely a psychological level. I did mention, I don't know which group it was with, but again, 1773 is the next 4 hour kind of major time frame level that I'm looking at for targets to the downside. And again, there's a lot of reasons we could have this. I mean, it could be the economy doing better, the stimulus not coming, the inflation not being there. The pound morning basically said that they're shooting for 2% and they see slow and steady inflation, which is not the rampant inflation that old hawks out there were thinking we were going to get. So, again, there was a trade short this morning. This one actually would have kicked in a couple hours ago in the overnight, again, in the session. But right now, I'd have to say I'm a bit more bearish on this one heading to the downside.
Yeah. So yeah, here we are, and again, I'm just going to draw it so you can see it on the. We'll do point to point. We've been calling this 1830-ish level. It has gone back a ways. It has constantly found some support in there, and when it finally broke through, there's that breakthrough. Then, and I like Brian's description of a Harry Potter. You look for that. Once it breaks through, you look for that retracement right back to that level where you're looking for that confirmation, and then it does. It creates a lightning bolt, boom, and then it just started coming down. Now, you're watching that trade set up right off of that roughly 1830 level that we've been looking at for quite some time. We would expect if you were to see gold rally, there would be some resistance back up here. But as Brian was mentioning right now, I mean, we're definitely starting a bit of a downtrend. So where is this going to go? 1800 is a very psychological level, which is where we are right now. So we'll see how that manifests in the marketplace. Keep an eye on that. But then 1775 below, and if you wanted to trade this and just trade the price of gold, I mean, one way or the other, you want to buy gold because you think it's going to rally. There are some opportunities with knockouts where you buy the knockout. If it were to get down to the 1775 level and you thought it were going to bounce, you buy this, you're going long the price of gold, Delta 1. If it were to come back up, you could potentially profit. Knowing that if you were wrong it would stop you out. You would get knocked out of your trade if it touched the lower boundary. So knockouts, an interesting way to play moves like this, and when we're seeing volatility like this. Gold finally starting to break out of that range, so there's probably going to be some opportunities for gold in here as people try to find out what the next levels are going to be. Let's finish it up with one other thing. Yellen talking. This is oil is something to keep an eye on. And right now, I know it's constantly it's been melting up or drifting higher, but with oil, it's a supply demand product, right? We're getting news releases coming out of OPEC and other oil producing countries where that's going to talk about the supply. How much supply is there? That's going to move the price of oil. Then there's the question of demand, and we're getting a lot of economic news. What's going on if the economies of the world are going to start firing again? Economies start going, we're going to start consuming more oil. People, whatever it is. So very news-driven market. Let's talk a little bit about oil and what we got going on.
Yeah. So first thing for oil, and again, not that Yellen is necessarily the biggest kind of, oil mover. But again, he is in a position right now, being, the Treasury Secretary. She obviously has some control over the economy. She's having a meeting today to talk about volatility in the financial markets, obviously, particularly with, GameStop and everything, which, by the way, is like back down at $90. So this is kind of changed to it. Because, again, she's going to mention, speculators in the market. Oil, definitely a speculator's market. Right? It's nothing but speculator. It'll be interesting to see what she says and how that kind of inhibits oil. Now, jumping across, here's where we have for oil. And we talked about being up into this hourly zone, and we needed to hold it. It did. We're at the very, very reaches up top. Now, OPEC has basically said supplies go down across the board. We're not going to tell you what we're doing for our production in April, which means they're producing more. UK data was good, but again, they said slow and steady. They're not looking for an explosion in price. And if their slow and steady is kind of in lockdown, we'll see how long the lockdown lasts. Some other countries are doing well. Right now, we are very, very high on what I would call the curve. Now, there's not a whole lot of it. So if we do break, it does have the ability to run higher. But at this point, this is more to do with production that I would say than anything else. The perceived notion that we will have recovery. Again, the economy being good doesn't mean that everybody's back to work and that we're using things. And again, remember, a lot of this data is based off of what the old normal was. I don't think anybody truly knows what the new normal is. How many people will stay at home? Like, yes, there'll be less supply. How many people will be telecommuting more? How many companies have seen the benefits of not having the office space or not needing as big of office space because they have been able to have workers? I think the new norm going forward is different. Plus, with this administration is very kind of anti-oil, anti-fossil fuels. I mean, yeah, we have less supply, but we have the driving force of the country right now is very anti-gasoline and anti that kind of stuff. So it's nice there's a quick pop up in this one. I think short opportunities are what we should be looking for. I think there's been a record number of executive orders signed in 2 weeks, and I don't think any of them necessarily help oil whatsoever.
Right. So, and this is one where if you want to trade the price of oil. We don't know what's going to happen. I think we're at levels where everyone's waiting to see what's going to happen. Binary options would probably, because they're smaller contracts, very defined, limited risk, limited reward. What do you think oil's going to do here? And here we are with the way that it's chopping.
And I like oil more bearish than I do, bullish. That's just my take on it.
So in that vein. Here, I'm going to open this up so we can see some more of these. These are contracts that expire today. Man, I've really got to, there we go. And we can see all these binary options. If this thing's going to continue to chop sideways, remember, every one of these is ultimately in 5 hours going to go to either 100 or 0. Looking for a limited risk, limited reward way to take a short. Or if you think it's just going to sit here and chop sideways a bit, there's probably and there's not going to go higher. There's ways to potentially take that where where you don't think it's just going to go any higher. You think it's just going to stay here, maybe drift lower. Limited risk, limited reward way to take a short direction on the price of oil. And again, each one of these, if you sell a binary option, the most you can make is you collect, but it goes to zero. If you were to buy one, and that's your risk, but it could go to 100 if it just stays above there. Remember, binary in nature. Every one of these is either going to be 0 or 100 in the end. Is it going to be above this level? Yes or no? And you can measure your risk reward before you get in. And if this is going to be a slow sideways day, there might be a way to play this with binary options.
Yeah,
All right.
I think people are. I think people are scared of yelling. I think that's the.
Yeah.
Like you said. I mean, we had unemployment data that just came out. This is the last thing we can roll. We had unemployment claims numbers. Yep, unemployment claims numbers came in at 779,000 versus the expected 828. So again, that's a great reduction. We've seen great employment this week. Market is doing nothing. Market hasn't reacted to it at all. So I think it's like, okay, this is Yellen's first big meeting. What the heck is she going to say today? So again, there should have been a little bit more of a reaction off of this, because this is definitely a positive sign.
Yeah, good economic numbers. Again, we're going to have more economic numbers tomorrow morning. So be on the lookout for that's the unemployment rate and what am I blanking on? Non-farm
payroll tomorrow.
Non-farm payroll. I'm having a gap. I need more coffee this morning. All right, so yeah, definitely be on the lookout for those numbers tomorrow morning, and listen to what Yellen has to say and how the Fed's going to position this. With that, if you got any questions for Nadex, email us, please, customerservice@nadex.com. We're here to help you. I have that Trustpilot review site up there. If you could take a couple minutes and give us a review, we'd really appreciate it. You go to trustpilot.com/review/nadex.com. It only takes a few seconds. Would be great if you could give us a review on Trustpilot. And lastly, Brian is also available. People, please feel free to reach out to him. I know a lot of folks engage with him via email. You can reach him at support@keeptradingsimple.com. With that, we've got definite some opportunities to look at today. Keep your eye on gold hitting that emotional level at 1800, and oil. Let's see what happens as the markets start digesting the economic numbers and we start hearing how Yellen speaks today. Thank you for joining us. Brian and I will be back again tomorrow morning. With that, we want to wish you all good luck in the